Hello and welcome. You've tuned into Last Stick here on News 9 Live. I'm Krishna Kumar and joining me in the studio is my friend and colleague Suyash Maheshwari, and we will be taking you through the day's trading session over the course of the next 20 to 25 minutes. So stay with us. The Indian markets witnessed a meltdown in yesterday's trading session. But then things have sort of come back to normalcy, if not to full normalcy. After the meltdown where the Indian stock markets saw more than 14 lakh crore rupees of market value getting wiped out in a single trading session, take a look at that. All in the green for the day. Nifty up a little over 0.5%. Sensex up around 0.5%. Nifty mid cap up 2%. Nifty small cap up 3.5%. While India's volatility index was up over 5.5% as well. Everything in the green over there. The volatility index at 13.62 is something that you have to keep a note of. But we're trying to understand, after that massive sell-off, that crash as it's being described yesterday, have we recovered enough? To do that, I have with me for now Suyash Maheshwari, after which we have a very special guest joining us on the show. I'm going to first begin the proceedings by talking to Suyash. Suyash, we've been talking about this, the markets were overheated. There was that term being bandied about. But then again, whenever a crash like that happens, the hope is that the rebound is as good as the crash was. But that's not what happened today, was it?
I mean, after yesterday's meltdown, the midweek meltdown that you were talking about as well, the markets did recover, by the way. Let's put it out there. 0.5% rally, for the headliners and a 3% rally for the small caps is not like a small bounce back. Right. But is it a smart recovery or a dead cat bounce? I mean, that is something that we need to be, cautious of. But if you ask me, I think the meltdown that's happening in the broader markets, Krishna, that is perhaps here to stay, because, especially in the small caps, because that is a segment in the market that has pretty much rallied unilaterally in the last 1 year or so, since March 1 of 23 to March 1 of 2024. The index is up 75%. True. All constituent stocks have delivered phenomenal set of returns. So after a rally like that, it makes sense for the market to give away some back, right?
Okay.
But I think, the bigger question, and of course, another thing that, I would like to point out is that even if the market does not continue on its path to recovery, it may consolidate, right? So, I mean, it's for the investors out there to decide. So, whether they should participate in this recovery, because I mean, time and again, we are not expecting them to outperform large caps. That's the word we are getting in from the experts. Okay. So if they are not going to outperform the large caps, does it make sense for you to take extra risk for, for similar or lower returns? That's the big question. But I personally, I'm looking at this crash and wondering if it's going to, cascade into that 2018 sort of a meltdown we saw in small caps. Remember, back then the small cap index had corrected 45% from its peak. And there are certain similarities, Krishna, that, we can draw parallels between then and now. Remember, back then a lot of, the market was of course volatile, and a lot of volatility was coming from, geopolitical tensions, trade tensions between US and China. We are going through 2 wars. So the geopolitical situation is much, much worse. And then again, I remember SEBI was also very cautious about, this froth building up in the system. Even back then, they had rather tightened, regulations for mutual funds focused in small cap funds. Back then as well. Even now they are talking about froth in the system. They have been pretty much on every other day, they have been talking about, raising alarm bells that there is excess that has built up in the broader markets. And they even wrote to AMFI to conduct this stress test every 15 days for the mutual funds, especially that are focused in the medium, in the mid and the small caps. By the way, the first result for that stress test will come out tomorrow. So okay, that will give us certain insights. I mean, how quickly can these portfolios, redeem, basically how quickly they can liquidate themselves, and in the process of liquidating, how much of a cut are they going to take? Because remember, a lot of these small caps, 95% of the Indian market are small caps. A lot of these stocks are illiquid, and when stocks are illiquid, the spread gets wider and wider between the buy and what the market is willing to pay for it and what the market is willing to sell it for. When the spreads get wider and you are out there trying to sell your positions, you may end up selling it at a price much lower what the current market is showing. So there could be that concern as well, and we'll get answers to that tomorrow when the MS stress test results come out.
Okay, we will get answers for that mutual fund stress test tomorrow. But let's get answers about the way the trading session went for today from our special market analyst joining us on this broadcast live. We have Mr. Amit Gupta joining us from FinTech. Amit, great to have you on the show as always. Thank you so much for taking time to be with us on this edition of Last Tick. Talk to us. How do you read this? Is this a proper bounce back? Because, let's face it, in terms of sheer numbers, Sensex lost a lot more than what it gained for the day. And same with Nifty. How do you read today's trading session, Amit?
Yeah, hi, good afternoon. Thank you for having me. So I think there were many reasons for sell-off. Some of them were anticipated. They happen every March. There is a very high amount of advanced tax payments. Some technical reasons like the FTSE rebalancement, etc. Indices rebalancement happens. And on top of that, you have year-end rebalancing also happening in portfolios. And obviously, the markets were quite overstretched. In fact, yesterday when they were closed, they were oversold. The put-call ratio was about 0.6. So my sense was, this is more of a bounce back from those oversold conditions. Obviously the markets were also very overheated and overextended. We have been saying that for almost 2-3 months now. So people who were hoping for a correction, I think this is sort of godsend. The growth of the country remains strong. The reform momentum stays strong. Hopefully elections will also be positive in what is market expecting. So I think the issue in the market was this SME and the microcap space, which were a trouble in the marketplace. These are the very overextended spaces, and they were being propped up by unsecured lending also. So I think regulators have just curbed on that. And now we have to, follow the earnings growth of the companies which we are invested in. So I don't expect, that markets will bounce back very sharply, especially the large and the mid-cap space part of the market. But there could be some consolidation before we actually, go up again.
All right, and Krishna, I mean, to Amit's point, we are not talking about the seasonality effect. March is a seasonally weak month for the markets,
right?
And there is, of course, that advanced tax deadline that is also coming, out. That's also on March 15. That is tomorrow, and a lot of tax harvesting also, remember, goes out, goes on during this time of the period, because especially in investors who have made good high levels of realized profits and who also have some bit of a loss on their portfolio, long-term losses, they try to book that and bring down their tax liability, and it's a common practice in the market, and that's what there is, of course, a seasonality effect also that's at play. But Amit, coming to you, we were trying to draw parallels between the 2018 crash and the meltdown that we are seeing in the broader markets. What's your take? Is there like parallels? Are there like similar trends?
Or to put it even more simply, is this the beginning of a correction? Was yesterday just a sign of things to come? Because you've been telling us also on the show over the course of the last many months that there is a correction that's imminent as well as far as Indian markets are concerned.
Yeah, I think, when things get so overextended, then, sort of a correction sort of sets in. But if you look at, the period post the global financial crisis from 2010, a simple stats will tell you that there have been no 3 consecutive years where mid caps and small caps have consecutive earnings increases at the index level. So if one looked at that space and, with the hope that the smaller companies will grow faster this year or the next year, then those hopes were, I think, overextended and over optimistic. Now from COVID bottom, we have like 4 years now of consecutive strong growth, and that strong growth happened because some newer themes emerged. There was a lot of liquidity in the markets. People were putting a lot of money in the SIP, so that growth was sustaining. But there reaches a point where the valuations won't sustain the earnings growth. And I think that's what worried a lot of analysts and myself during the last 2 months, that there was no earning growth which is coming, and the valuations have gone through the roof. So I think there are still some sectors which needs to correct even more, but at the same time there are opportunities in certain sectors where I think one can start putting in some cash. Remember, whenever we have talked, we have said that it good to have 10 to 20% cash in the portfolio, so that whenever there is a correction, we can deploy that. I think the time has come to start nibbling, and then eventually over the course of, let's say, about 1 month or so, one can put the cash into use.
Okay, at this point in time, I want to also talk about the fact that the commentary coming in. How much, Suyash, do you think the commentary coming in from somebody like Madhvi Puri Books, who's the chair of SEBI, talking about the fact that there is something, a simple word like there is froth, quote unquote, there's froth in the mid cap and small cap stocks. And less than 48 hours from then, you have a battering of small cap and mid cap stocks. Yes, they're back. If you take a look at the mid cap and the small cap indices for the day, the small cap index is up about over 2%, 3.5% for the mid cap index. Tell us, the commentary is interesting because Mr. Uday Kotak has something else to say. The SEBI chief has something else to say. How do you read these? How do you read them between the lines?
But first off, Krishna, it's not every day that the regulator comments about how the market is doing. So that is rather unprecedented. But I mean, a stitch in time says 9, right? So I think what Madhvi Puri Butch is doing or saying out there, I think it's well intended. It's trying to clear, like the comments, they are trying to raise alarm bells now, so there is not a big collapse later on.
True.
Right? Because again, look at the rally. You just need to look at the price charts. The way these stocks have moved, and almost unilaterally, I mean 75% rally in a year. Remember, stocks price movements, they are function of two things: the earnings growth and the future potential for these companies to grow. Investors are focusing too much on the future potential to grow. They are not really looking at what the company has currently to show for.
Right, Amit, I'm going to bring that question to you. So how did you read those comments coming in from the regulator? Not every day the regulator talks, sector-specific action when it comes to stocks, specifically pointing out mid-cap and small-cap stocks.
I think a couple of days ago, I was also talking to Suyesh, and I made this point that, I was actually quite surprised that this kind of commentary came so late in the rally. The kind of movements have been seen, especially in the SME space, and the kind of price manipulation which has happened in the SME space, especially in the IPO, at the IPO stage. I think, regulator could have probably stepped in much before. But it's never too late, even if I'm quite confident that in this mutual fund stress test, all the mutual funds will come out on the right side of the pendulum. Because we've already seen, if anybody was overexposed to any small caps, they would have sold it off just to meet the stress test guidelines and the disclosures. But having said that, I think there is still a lot of froth in the SME space. A lot of companies need to decline even further to bring some sanity. And I also believe that the disclosures related to SME IPOs and in general about the operations of these companies needs to go through an overhaul, and we will see some regulations coming in from SEBI in the next 3 months to actually avoid or try and stop this price manipulation which happens in SME, because now our investor base is quite large, and people who does not have sufficient knowledge to invest into the markets will just see the past returns and invest into these companies. So there has to be some checks and balances which needs to be put in by the regulator. How much SME IPOs should be done, and how much money a retail investor can actually put in.
I'm just going to quickly ask about that volatility index and then move on to something very important we're discussing, and that is the entire details regarding electoral bonds that's going to come out tomorrow. SBI, bear in mind, has furnished the details on the order given by the Supreme Court of India. Amit, quick question to you. 13.62 was the volatility index today. Comfortable still, not comfortable with it?
No, I think it's a little comfortable. Anytime it goes above 15, then then we need to start worrying a little bit. 15, 15 and a half. It's still under control, and I think since markets were quite oversold, we have seen a bounce of the AIX has also cooled off a little bit. We'll see, how it works on Monday, especially because everything will come out by Friday evening. In most probabilities, elections will be also called over the weekend. So we'll see how it reacts on Monday morning.
Fact of the matter is that volatility has fallen for the day by over 5.5% at 13.62, very comfortable. So I'm asking this question, Suyash, because you have people, the famous people in India's markets, from Nilesh Shah to Uday Kotak. Uday Kotak incidentally is saying that India is nowhere close to bubble territory. Nilesh Shah talking about the fact that you've got to be invested in it for the long term. If your risk appetite is low, then they're saying that this is not the right time to be in the markets. But then again, you're talking about a situation where news is flooding this market. From that commentary, look at that. Uday Kotak saying that India's stock market's nowhere near bubble territory. So, for all of those wondering, if there is a big bubble that's bursting as far as India's stock markets are concerned, no. Then, of course, all of this began with that commentary from Madhipuri Book, the chairperson of SEBI, who went on to say that there's froth in the mid-cap and small-cap. So she's saying that investors should take a long-term view of the market to overcome the inflation rate. That's also another comment coming in from her. We also have Nilesh Shah as well commentating on it. The question here is that one is that commentary over there that's coming in. Nilesh Shah saying that there's a need to be cautious in this market. And then there is news that's coming in. So you have tomorrow the details of electoral bonds being published, which means that we will understand from which companies invested how much or gave away how much money to electoral bonds to political parties. How much of an impact do you think that could possibly have on the recovery that we've had so far?
All right, but first a word on all these commentary that is coming out from the experts and the who's who of industry. I mean, prices move and reasons follow. That's the old market saying. We always try to over-analyze why something is happening in a market. Why are we seeing a 5-6% fall? So it's just paralysis by analysis, in my opinion. But again, tomorrow is going to be a very crucial day. Let's not forget, tomorrow, of course, we have MF stress test result that come out, advanced tax deadline tomorrow, that's also, and electoral bond details. And Krishna, I feel particularly, I don't know how much your domestic institutional investors, will really be affected by the outcome of this report. But I think it will be a good or, something that FIIs will keep a close eye on, because if you are a loss-making company and you are giving out political donations without naming any company, that is problematic, right? It's clearly going against your shareholders' interest. Also, then remember corporate governance issue. We have been talking about a lot about the corporate governance issue ever since that Hindenburg report came out on Adani, and that's on the top of their checklist when it comes to investing. So if there is anything adverse, they could pull out.
Right, Amit, I remember corporate governance, and in the US there used to be this term called Sarbanes-Oxley that used to get bandied about was the main important factor for corporate governance, to understand corporate governance. But then that specter of corporate governance always continues to haunt Indian companies and Indian stock markets, and how foreign investors view India's stock markets, and this details of electoral bonds is bringing all of that back.
Well, India and US economy works very differently. The businesses work very differently, and the political donations work very differently. In US, you get 90% of disclosures. In India, probably you get 10% of disclosures. Having said that, I think there are a lot of corporates who make political donations and they show it on the books. It's not that they don't show it completely. I think the point here would be, and your guess is as good as mine, that if there are corporates who haven't, who have donated very large sums of money to political parties and then haven't really disclosed it in the interest of minority shareholders. So if there are any names to that, then I think there will be reaction. But if it's a watered down version with not many details and not much clarity, I think market will pass through that event.
Is that what you are actually, intuitively expecting to happen, Amit? Your last comment over there, it is going to be sort of, watered down because, you don't want too much of an earthquake in India stock markets, right?
Not just stock markets, even in elections. I think,
Yeah.
given that the elections will be declared soon, political parties don't want any kind of issue at this point of
Yeah,
time. So
yeah. Talk about elections. Actually, Amit, we've got news that the election dates could be announced any time today. And in fact, we were not sure we were going to be discussing election dates at this point in time or stock markets for now. Election dates have not been announced by the Election Commission. We are discussing stock markets for now. Amit, stay with us. Suyash, big news day tomorrow. We actually, ideally speaking, for all that we lost in yesterday's trading session, we have some more bit of ground to gain and gain back. But then again, at this crucial time comes a news-packed day like that. So in that sense, there's that famous Chinese proverb, may you live in interesting times. We live in interesting times as far as the Wall Street is concerned, isn't it, Suyash?
Certainly, and a lot of dust will be settled tomorrow. I think the markets are slightly jittery. In fact, they are quite a bit jittery considering the price action that we have seen play out this week, especially in the broader markets. And a lot of clarity will come, by the way, tomorrow, from both the results that come out tomorrow. So Monday, I mean, it's going to be a really interesting session.
Yeah. That's what Amit is also alluding to, isn't it, Amit? The real test will be when we pass through this week.
A flow test for markets.
Yeah, and then what happens on Monday, isn't it? Because tomorrow will also be about digesting the news that's coming in.
yeah, I think the ideas of March this time, 15th of March has become really big. Just by the stroke of luck, I think everything has, come together on the 15th. There are a couple of minor, also, SEBI board meeting is also there. So I think it's going to be an interesting day tomorrow, and hopefully Monday we'll have some big moves either on the upside or the downside.
All right. Amit, also wanted to get your view on the railway stocks. They bounced back in a big way today as well. And I mean, a lot of these stocks, they have a very low float. Is that why we are seeing such rapid price moves?
Yes, I mean, not all stocks, I would say, are not backed by fundamentals or free float story, but almost like I would say 60 to 70% of these stocks are price manipulation in terms of free float. There are very few buyers who are actually buying this, and then you have momentum from the retail investors also coming in. So that definitely there is the free float story. But what also happened was that this big SIP book which was there, mutual funds had to put in some money into these momentum based names, and what we have seen is that in certain sectors like railways or even in defense, what we have seen is that stocks have really gone through the roof, and they're not in sync with the valuations. Also, the payments is a big question mark. The execution may be a little slower than what market is expecting. Payments have always been a concern because remember here the client is government and the payments have to come from the government. And if there is any kind of slowdown in the economy for any reason, then those payments can also be delayed, and you can have stretched working capitals for a lot of these companies. So I think in that sense, I think the move was quite extreme, and we might see these trading bounces happening every now and then. But for me, I would like to stay away from these kind of stocks for now. We have participated in them earlier when they were really cheap, but we have exited some 4 or 5 months ago.
Because since last 4 or 5 months, nothing is cheap in the Indian markets, is it, Amit? Neither the mid cap, nor small cap, nor railway stocks, and definitely blue chips and large caps have become untouchable. Like real estate prices, like buying a home in India, which has become out of reach of so many in this country. Blue chip and large caps have become out of reach, and soon enough, small caps and mid caps are heading in the direction. But then we had a big correction yesterday. Well, we have a very interesting trading session lined up tomorrow. But for now, I'm going to thank Amit Gupta for taking time out to be with us here on Last Take. Amit, thank you so much. It's always fun talking to you. It's so much knowledge you give us. Thank you so much for being with us, and hope to keep having you on the show again and again. And of course, Suyash, my colleague, joining us. Of course, he will be taking you through all the trading action come tomorrow morning on First Tick. So make sure you tune into that. But for now, this is Krishna Kumar signing off. Thank you so much for watching. Coming up next is Business Plus.